Good day, ladies and gentlemen, and welcome back to Real Estate America's Newsroom. It is the beautiful month of May, the 17th day in the year of our Lord, 2022. We've got an action-packed show, as always. I know you guys like hearing me say that. We have an action-packed show. We're going to talk about some new tech. New tech shows major increases in fire hazards to homes across the U.S., incorporates this new tech into Realtor.com. So every single home in the United States of America now gets a fire rating that consumers can see before making a decision on whether they want to move forward or not. Bitcoin will not be an alternative to the fiat dollar, so says former Fed Chair Ben Bernanke. We've got a report that kind of talks about what Mr. Big Ben thinks about regarding Bitcoin. The latest drop, is it an alternative to the fiat dollar or not? And what his opinion is on what the Fed is doing right now and where the economy is going. We're going to talk about Freedom Move USA, how realtors can go ahead and help save their clients $10,000 to $25,000 and also make tens of thousands of dollars yourself and really kind of crush the competition in segment 3. And 2022, oil prices are heading over $150 a barrel this summer. So says some large analysts from Goldman Sachs. We're already hurting at the pumps. I know everybody is. I was just over at the 7-Eleven last night going, what's this thing? And also, speaking about Goldman Sachs, they come down to Florida and make a decision to go ahead and purchase a whole community for $47 million, which is probably about 120 to 130 homes. What does this mean? So before we get rolling forward, I'm going to introduce my esteemed and illustrious co-host, Mr. Nick Sachs. He loves when I say that. Hello, Mr. Nick. How are you doing today, sir?
What's up, buddy? Do I look any older to you? It was my birthday on Sunday.
No, you are younger every year.
Just a young buck. So that being said, anybody who's watching, since it's my birthday, my only birthday wish is that you share the show. If you like what we're doing, comment, let us know, and just go ahead and share it with all your friends. We work really hard behind the scenes to bring you guys valuable content, and we'd really like for you to give us a little bit of help and spread the love.
Why should they even watch us?
I got to tell you, if you're in the real estate industry and you're not watching the show, you are probably missing the boat, right? REU Nation, which anybody can go to and check out all the show notes. Go and be a contributor if you want to be on the show. We want market representation. So we're looking for people in every single market. We want to know what's going on. We want this show to be boots on the ground, what's going on in your neck of the woods, have representation. This is a show for the people, and we're just bringing it to everybody live. So go over to REU Nation and check us out.
Yeah, we are streaming live today, ladies and gentlemen, on the REU Nation network. It is a cool thing. It really is, and it's going to grow. It might even grow right into your Roku television here shortly.
Hey.
So, yeah, these are all good things. Today, Nick, we've got a lot to talk about. I kind of came through the weekend and opened up the world of mainstream media and saw all of these things gleaming at us. It seems like news comes at us pretty fast and hot every single day. I'm quite interested to go ahead and talk about this new technology. There's a team with some supercomputers that said, hey, we can go ahead and analyze fire danger in the United States of America, amongst other things. And now Realtor.com picks it up, and we've got fire ratings according to this software inside of their system. What say you?
I think it's a great play by Realtor.com to have this exclusive data in their app, right? And we'll go over it in some more detail once we show the clip, but to have exclusive data that, the big player in the room, Zillow, doesn't have, driving traffic to Realtor.com for people to download their app is a pretty big deal for them. So it's an interesting technology. As our buddy Mark coming on the show talks about, this could be the new flood, right? This could be the new barrier for home sales. So it's something to really keep track of.
So what Mr. Nick is talking about, ladies and gentlemen, is FEMA updated their flood maps. It's their flood map 2.0. And a lot of the insurance companies are like, oh, what's this? Insurance has gone through the roof. And that's my biggest question here is, well, now all of a sudden, since there's more awareness of prospective fire danger to homes, the insurance company is going to go ahead and pick up on it. Well, we'll keep a close eye on it from Real Estate America's newsroom for each and every single one of you, ladies and gentlemen. But Mr. Mark actually in the pre-show here today said, it's funny that we're talking about this because there's fire in his hometown, right in his neck of the woods, and homes are burning to the ground. So we'll bring Mr. Nick in to talk, or Mr. Mark in to talk about that. Bitcoin. So says Ben Bernanke will not be the alternative to the fiat dollar. I know you have something to say about that.
Yeah, I want to wait for that segment. I got
We've
I got a lot. That could be a whole show, but yeah, there's some interesting things going on in crypto right now.
I tell you what, I've got a couple, 2, 3, 4 handfuls of friends that called up Mr. Wolf and said, "Oh my gosh, we just lost a lot of money in Bitcoin over the last week or so."
Yeah.
But we're gonna talk about that. We'll bring back Mr. Tim Parnell from Patriot Wealth Nation, joins back the show, and we know he's got a lot of tremendous information to go ahead and share with us on the difference between alternative currency and the fiat dollar. So, Nick, I was at the gas station last night, and it cost me just about the same amount of money to fill up my beautiful Jeep Wrangler as it did my pickup truck a year and a half ago.
Yeah, it's a real problem, man. Even my minivan, dude. The minivan costs is $75, $80 to fill up. That's unheard of. We were $40 max to fill up that little fun wagon. So yeah, if you're traveling to work every day, you're definitely feeling this inflation big time.
So some analysts from Goldman Sachs are saying that we're gonna hit the $150 a barrel oil prices. So it'll be interesting to see the trickle down effect from all the rest of this stuff.
Yeah, because we were at what, 139 when they started to raise. That was the cap. I think it was somewhere around there. The most recent cap was 139 or 140. So yeah, could be another big spike.
It'll be interesting. Well, and Florida's back in the news, and Goldman Sachs picks up a whole neighborhood, not just 1 or 2 or 5 or 6. They're just like, just give us that whole place right now.
Yeah, we talked about this before, right? The rental economy. You're going to rent everything, and you're going to like it.
You're going to own nothing and love it.
Own nothing and love it. Yeah.
Yeah. Interesting. Well, it's about that time that we go ahead and start kicking off the show. We've got some awesome news clips from the mainstream media that we're going to go ahead and bring in front of you, ladies and gentlemen. And then we will roundtable and dissect with all of our guests. So a couple of these things are a little bit longer than usual, but it definitely gets to the point. And I think we should just go ahead and get things kicked off. Let's move into our first segment. Let's talk about this major tech in the industry right now. Here's a CNBC news report to kind of talk about what's going on.
As a massive wildfire continues to burn in New Mexico and others erupt in California, more homes and buildings are at risk. And given the increase in frequency of these fires, the real estate risk will likely rise for years to come. So how much exactly? Well, a new model thinks it has the answers. Diana Olick joins us right now with more. Diana, what are you hearing?
Well, Becky, new technology launched today is now mapping wildfire risk city to city and even house to house. Brooklyn-based nonprofit First Street uses everything from property tax data to satellite imagery to incorporate construction type, exposure to combustible trees and grass, roof type, and weather. And then it assigns a wildfire risk score to each individual structure, both commercial and residential.
We can then use supercomputers to simulate 100 million scenarios of wildfire today, and then another 100 million scenarios 30 years in the future with the forecasted weather conditions.
Now, it did the same for water, working with Realtor.com to put a flood score on every property on the site. That's now the second most clicked feature, right behind schools. Starting today, there will be a fire score for each property, whether it's for sale or not. And so far, it found at least 10 million properties ranked somewhere between major and extreme wildfire risk. While flood risk grows by about 25% over 30 years, wildfire risk is doubling overall and jumping more than 200% in some places you might not expect, like New Jersey, Massachusetts, Florida, Louisiana, Alabama, and Arkansas. Big real estate firms like Nuveen are buying this data to inform their commercial investments. They're looking at both potential purchases as well as the properties they already own so they can reflect increasing risk in their underwriting. Back to you guys.
I guess, how do you think this plays out just in terms of how much prices might go up as a result? I mean, that's going to be the big question for homeowners.
It's interesting. I asked about the flood score and if that had any effect on home values. And they said that it didn't bring home values down, but in some areas that had very high flood risk, they did see home price appreciation slower than in other parts that didn't have as much high risk. But you have to wonder, those places are going to have flood insurance anyway. And people are getting very savvy to this. So you could think that the fire risk might have the same effect on this. But they also said that they didn't get a whole lot of complaints about the flood score. I thought people would be up in arms about it if they thought their properties would be devalued, but they said they were really surprised they didn't.
There's a couple triggers, right? Where if I'm shopping for a home on Realtor.com, I really like it. It's gorgeous. It's a beautiful 4-bedroom, 3-bathroom house. It's got a nice pool in the backyard. It's got all of the amenities that I need. And then all of a sudden I see this, fire risk is at 8 out of 10.
Danger.
Uh-oh.
Yeah. So, yes, I think there will be a pullback from a portion of buyers who are conscious on this type of scenario, and it could affect prices. However, I do think it's more of a situation where if there's more awareness, just like the FEMA 2.0 flood maps, insurances are going to go ahead and look at all of these things with fire danger. So technology comes in a good way, and sometimes it has a little bit of a opposite effect on things. Nick, what say you?
I think it's another excuse for insurance prices to go up and or squirrel some deals for the real estate agents involved, right? I think it's a cool technology. And Tony, we were joking before about the supercomputer. What exactly does that mean, right? And 5 or 6 years ago, this cell phone would be considered a supercomputer. So we don't exactly know what that means, but for Realtor.com, it's a good play to pull people off Zillow to have some exclusive data on their ecosystem. For me, I think the people in the areas that are buying homes that have fire hazard know about it, right? So if you're an investor and you're investing into a place you don't really know, or if you're thinking about moving from one location to another, like that would be good. But the general population in those areas, I think, are pretty well aware of the risk of the fires that are going on. So I think the people who are moving and relocating, it's probably a really good feature. And I think the insurance companies are going to be all over it. And like Mark said, flood map 2.0, here comes fire map 1.0.
Well, let's get right into it. We've got one of the top appraisers in the whole state of California sitting right here. Mark, is this going to affect the home valuations across the United States of America because of fire danger?
Well, it very well could. The demand for these homes, when more of the potential buyers become aware, and I think it's incumbent upon the realtors actually to make your buyers aware that this is an issue in the area, and let's see what we can get for you in terms of insurance, and if we insure it at all, or has it been redlined and excluded from insurance, or what will that premium be? Because a lot of people might be shocked about that. So the value is really a measure of supply and demand, and if the demand in a certain areas decreases, and as she mentioned in the news clip there, it didn't really affect most people. She was shocked by that, but it did kind of slow things down. So I think it's interesting that typically when we talk about risk in real estate and lending, we're talking about the risk of overvaluation. And at this point now, we bring in natural hazard risks, and we've always been required in a loan to check the flood risk. And increasingly in areas that you wouldn't expect, we're seeing fires flare up. And here we had one in my town, and a lot of it had to do with we haven't gotten a lot of precipitation and rainfall, so the vegetation out there is super dry, and it goes up, flames up just right away, and then things fly around, and homes that weren't directly on the canyon caught on fire also. But this is not just only in California. This is happening across the country. Last summer, all across the Northwest, they were smoked out from Sacramento to Denver. They spent the whole summer in unhealthy air.
There is a serious drought issue in the southwest of our great country. It's looking pretty bad. I know in Arizona, I'm seeing some of the large lakes that we all know that are famous, like Lake Mead and Havasu, and these things are way down. So that's going to be an issue out there in California. It looks like once again this year. It seems like every year we're seeing California burning. So quite interesting. Mr. Tony, so new technology as a realtor. Is this something that you're going to go ahead and keep a close eye on? Maybe advise some of your clients, get over there and analyze potential fire risks on homes as you push buyers to it. What's your take? What say so you?
Wow, the ex-scientist in me is just screaming with 100 questions. Not to be a contrarian, but I'm not one to take things just because somebody said something on the internet. Now, that being said, number one, I think it is a step in the right direction in and of itself. Number two, I think, like we mentioned a few times in the show, some of this information and technology is going to have to get refined, questioned, recalibrated, and you know what? The facts will, show us what's really going to happen in the future. So here are some really quick questions I want to share with people, so maybe other people watching this can, think about their own questions. For example, this technology about the fire prediction, how is the data collected? Were they average sampling the sizes, and where did they get the information from? Or did they go home by home by home, millions of home, and rip a little piece off the roof and say, oh, now we know what this is made of, checkbox. So I'm wondering what they did to collect this data and who determined the values of each home. Let's say they're looking at the roof material. They're looking at what they believe on record is correct, hopefully, what the building is made of generally in the frames. So who determines the percent value? Is it a bunch of people who went to school, or is it a bunch of fire marshals from different parts of the country who have real experience? And for example, are they going to retest their data periodically? Are they going to rerun their tests periodically and recheck the recent outcomes compared to what they predicted? And will they willfully share with us the percentage of accuracy of this over time so that we, the consumers, can be more informed? And the last point I want to make is to allude to what Nick said. Insurance companies, they are a business. They don't do people favors. You give them money for something in return if and when something happens, assuming there's not a little clause in there like on Bugs Bunny, where it's only on a Tuesday on the 12th at 4 o'clock. Otherwise, the contract is invalid. So here's the last question, and really think about this. Will this technology, assuming it really does work as they claim it should, as the insurance companies start charging people more, and probably rightfully so, because they're saying, wow, these areas are high risk. If it turns out your home is in a lower risk, to their surprise, do you then in turn have a lower fire premium? Are there going to be opportunities for people to pay less for fire insurance because it turned out the evaluation of their fire risk is, oh, look at that, it's actually lower? So are the insurance companies going to keep the premium as they are, or reward people for doing what they can do to lower the fire risk while they're charging others more because of this data? So that's just a few questions I have.
Never less. Never less.
No deal?
No.
Less risk, less fees?
Not a chance. Not a chance. Like Chris Rock said, I pay insurance my whole life. If nothing happens, shouldn't I get my money back? Right? If I pay my entire life and nothing happens, I think I deserve my money back. Right? That was from 20 years ago, one of his stand-up routines. But yeah, I think Tony just got a new nickname. I'm going to call him Elon because he wants proof of the data. Right? You guys are seeing what's going on with Twitter. They're saying half the data, half the people are bots, and he wants a new revaluation. So old Tony on the scene, prove the data to me, baby.
It's my training and background, and it's just what I'm used to. And it does work well in this business, just being able to question things, what I call a consistently persistent, healthy level of suspicion.
Well, I think, Mark, each one of these homes is an individual. It needs to be individually assessed, right? In addition to maybe the neighborhood and everything else that's going on. Big example, I know that if you allow for a lot of foliage and trees and everything else like that to grow up around your house, obviously you're at more risk. But if you as a homeowner go ahead and push back a lot of these things, make some fire abatements and stuff like that, obviously you dramatically reduce your risk. So I would suggest, Mark, and maybe I should get your opinion on this, but if all of a sudden I see an increase because of fire risk, but I do have some definite fire berms and burdens and everything else like that, I should go ahead and talk to my individual agent and say, hey, look, I'm not as much at risk as you possibly think, right?
That's true. And in in this area around here, the local jurisdictions will have what they have requirements around the homes that are in these areas, and they require a defensible space. And the fire department does come out and check on that. And if you don't actually do it yourself, they'll go out and do it. And I don't know how that arrangement works, but we're very aware of the fact of this. We've had entire towns in California burned down, in Paradise and up in the Napa area and such. And one ran through Los Angeles all the way down to the beach. But what I find really interesting is that if you're going to do a million permutations and calculations on risk, you really do, like Tony said, need to get down into the details of the home, because some homes are built differently than others, and some are more fire resistant than others. So, for instance, if you build with steel framing, and you have a defensible space, chances of an ember catching your house on fire from blowing winds is less than others. So, again, like we talked in the past about property taxes going up and down. Well, when your home declines in value, it's very difficult to suddenly see a decrease in your property tax. Much like if you have a home that's less prone to flood, fire, wind events, would they give you a better deal on that? And it's hard to say, but you got to put yourself in the insurance company's shoes and think about what just happened and what's been happening. The amount of money that they have to pay out in these cases is tremendous. And I'm sure, Chris Rock would probably have paid enough for himself to replace that whole neighborhood, but they do have to pay out. And one of the last things I want to leave you with is, I think that realtors and homeowners should make certain that they are properly insured, because in a lot of cases, they might be using the appraisal that puts together a cost approach, which is a reproduction cost of the building, and is typically, in my experience, underestimated. So if you're saying to reproduce this house, it's going to cost $250 a square foot, and a high-end neighborhood burns down and it costs $750 a square foot, you're going to see a lot of empty pads sitting there for a long time and vacant land being sold because people can't afford to rebuild.
Yeah.
Understood. Well, quite interesting. We'll have to keep an eye on this new technology and this supercomputer. And did you just call Tony Elon?
I did.
Oh my gosh,
Mr. Musk. I should have given you this article. I read an article a couple months ago that was a comparison, like to 1950, of how much more combustible the goods in our homes are compared to 1950. If you think about like the materials, because we're in a throwaway society, right? We're just buying new. All the wood, all the furniture in our house is particle board for the most part, in scale. The IKEA model, all that stuff blows up almost instantly instead of real wood furniture.
Easier to go ahead and start some of that stuff for kindling than it is a solid oak table, right?
Like your office, right? Solid mahogany.
Solid mahogany.
Many leather-bound books.
Well, see, I'm doing my fire duty for my personal household, Mr. Nicholas.
See, you didn't even know.
Yeah, I did. Well, let's get on with it. So Bitcoin, so says Ben Bernanke, is never going to replace the fiat dollar. Let's go ahead and take a look at what Mr. Ben Bernanke thinks about the current Fed administration, what the economy is doing, and then also talking about alternative currency. Here we go.
We also talked with Bernanke about the chances of a recession. Here's what he had to say.
The more the Fed has to tighten in order to get inflation down, the bigger the chance of a recession and the more severe it will be. How much the Fed has to tighten depends in turn on what happens to these factors they can't control, like the supply chains and the commodity prices. So that prediction requires you to make a prediction not only about the Fed's behavior, but about a lot of other things, the Ukraine war, et cetera. So it's a very hard thing, very uncertain thing to say. I guess that I still tend to believe that some of these forces pushing up inflation, like the supply chains, like the preference for durable goods over services, and some of the commodity price increases, gas prices and so on, that they will at least stabilize and begin to moderate sometime during this year, which would mean that inflation will come down to some extent, let's say by itself, but without the Fed's direct intervention. If that happens, the Fed would have to raise rates perhaps moderately above neutral, say in the 3s somewhere. When they do that, they'll slow demand. But as Jay Powell has pointed out, the economy is pretty strong. We're not going into a recession as often is the case with a troubled economy. In fact, the underlying economy, as we recover from the pandemic, is quite strong. We have a very strong labor market, for example. We have a strong financial system. We have strong balance sheets. So if the inflation slows, as I expect it ultimately will, although I've been disappointed about how slow that process is, then the Fed should not have to raise rates, too far. And what we would get then would be a slowing of the economy, maybe even a stall, but not a severe recession. The severe recession would only come if these other factors simply do not cooperate. And in particular, the thing people should watch most closely is inflation expectations. If inflation expectations, as measured by break-evens in the inflation-protected securities market, as measured by surveys and so on, begin to move up in a significant way, that people have lost confidence in the credibility of the Fed will have to react much more strongly, and the effects in the economy will be much more deleterious.
And how concerned are you about that?
For the moment, knock on wood, this is a big difference between today and the 1970s. In the 1970s, inflation expectations were all over the place, and nobody had any confidence in the Fed that it would bring inflation back down. Today, most indicators suggest that people are still pretty confident that the Fed, or maybe some combination of the Fed and the end of the pandemic, will lead to more normal inflation in the future.
We couldn't have a conversation without talking about Bitcoin. Take a look at this. Bitcoin right now down a little under 30,000. And in Bernanke's new book, he writes about the potential of the digital dollar. So, of course, I asked him to share his point of view on cryptocurrency these days. This is what he had to say.
So Bitcoin and other currencies, cryptocurrencies whose value changes minute to minute, they've been successful as a speculative asset. And you're seeing the downside of that right now. But they were intended to be a substitute for fiat money. And I think in that respect, they have not succeeded. Because if Bitcoin were a substitute for fiat money, you could use Bitcoin to go buy your groceries. Nobody buys groceries with Bitcoin because it's too expensive and too inconvenient to do that. Moreover, the price of groceries, the price of celery, varies radically day to day in terms of Bitcoin. And so there's no stability either in the value of Bitcoin. And the main use of Bitcoin is mostly for underground economy activities and things that are illegal or illicit. So I don't think that Bitcoin is going to take over as an alternative form of money. It'll be around as long as people are believers and they want to speculate in this. But again, I don't think it's going to.
And you don't buy into the idea of
can you grab me some water?
Store of value or some kind of version of digital gold.
Well, as I said, it's a speculative asset, but it's one that whose underlying use value, gold has underlying use value. You can use it to fill cavities. The underlying use value of Bitcoin is to do ransomware or something like that. So one of the other risks that Bitcoin has is that it could at some point be subject to a lot more regulation. And the anonymity is also at risk, I think, at some point. So investors in Bitcoin should be aware of that.
Last night I had a sweet tooth. I really did. And I traveled over to a 7-Eleven gas station because it was after hours. The grocery store went ahead and basically was closed at this hour. And I walk into the convenience store and I look over into the cooler and there's a pint of Ben & Jerry's at $8.34. And then I was a little bit low on gasoline. As that I look up at the prices, I go, ooh, this is going to hurt. So, Mr. Ben Bernanke, some of you like him, some of you don't. He says gold can be used to fill teeth. Confidence is really the indicator in the economy. Inflation expectations amongst you and I and all of us consumers out there, and how fast the Fed is going to go ahead and react to strategy. We are in a very tumultuous marketplace right now. Mr. Tim, what say you about what Mr. Ben Bernanke had to weigh in?
Yeah, so I just want to clarify. Did I hear him say if you lose faith in the Fed, the floggings will continue until your faith is restored? Did I hear him say that? Or something to that degree? But here's the thing. anytime that I hear someone like himself or within that arena come out challenging anything that challenges the fiat dollar or the fiat system, all of it is garbage. All of it's garbage according to them, because they can't handle the idea that the fiat system would be challenged by anything. Now, I'm not saying that Bitcoin is the end all be all of the challenge, that it is the front runner for that, but Bitcoin fills this interesting void for the crypto world, is that it's the original, right? It's the one that everyone's familiar with. So when you actually talk about it, it's like asking for a Coke when you mean I want a Dr. Pepper, right? Because it's a synonymous, like Coke is a soda, right? Well, Bitcoin is a crypto, so people just use the term Bitcoin. So they try to downplay the value of Bitcoin, really just trying to downplay the entire crypto market or any potential valuable crypto coins. Here's my thing, and I say valuable, I say useful, solution, problem solving. But here's my thing. I really don't believe that Bitcoin is actually going to be a replacement for the fiat system. I don't. I do think that there is a challenge to it, but I think what you'll probably get before there's a replacement for the fiat system is a replacement of the financial rails the fiat system runs on. And I don't think that that is Bitcoin. I think that's something else. So I don't disagree, but I don't agree with why he's putting it out there.
Mr. Nick Sakis, Bitcoin is down 30,000 from not so long ago. What's the...
Yeah, I agree with Tim for sure, right? You gotta understand who's speaking and what their motives are with the words that are coming out of their mouth, right? I do think it's interesting. He flat out said you can't buy groceries with Bitcoin, because I certainly have. And I'm by no means a Bitcoin maxi. I do own other cryptocurrencies. And according to Ben, I'm a criminal, right, for owning Bitcoin. I must be involved in criminal activities, right?
Wait, is that because you have a crypto backed mortgage? Is that a criminal activity?
I tell you what, man. So like it's a challenge. It's something new. It's something that I still think, if you ask 10 people on the street what they know about cryptocurrency, maybe one or two of them would have any kind of general idea. So it is a revolving market. It is something that you have to, as far as safety and security, are you willing to, drop your money in the bank and let the bank take the risk for you and make all the money, or invest in yourself and your own knowledge, be able to play the market yourself? Markets might be down, but you could be up if you know what you're doing, right? Just like, traders on Wall Street are up and down markets. So, for the general public, yes, it's dangerous. For people who've educated themselves, it's a rare opportunity that we'll probably not see again as far as a global shift in something, but it certainly isn't just for people selling stuff on Craigslist or eBay or underground activities, right?
So here's my thought on that. And this is a question. If crypto is the hotbed for illicit transactions, then what does that make the fiat dollar? Okay, like, didn't we have drug lord after drug lord in South America bearing pallets and pallets of cash after they did their transactions in the fiat dollar? And didn't we actually have a $500 bill and a $1,000 bill that we had to condense down to a $100 bill to make it, so that you had to have more of it, so it's harder to hide in volume? I mean, like, literally, you couldn't call the kettle black any more than this conversation is, as far as what this man is saying. And so I find it laughable, but that is the primary argument against crypto, is that it has illicit activity and transactions that's associated with it.
Yeah.
And I just think it's ridiculous if you're truly being intellectually honest about what is dark money and who's spending it.
It's very spooky. It's very scary.
Right.
Continue to paint it as this unbelievable. I mean, you look at online, the memes that are going on right now. Like, when crypto's down, like, everybody that doesn't have crypto goes, "Oh, you mean fake money is fake? It's not real?" Well, like, what? What do you think the dollar is, man? Like, it's just first place runner right now. So there's a lot of things chasing it. I think there's a whole lot of people who are in the know, who are backing it. I think hilarious to see somebody like that talking.
Yep.
Let me bring back something that really stood out to me is consumer confidence. And
Right.
he even says, knock on wood right now. And how confident are you, gentlemen, that the Fed has the ability to go ahead and get this inflation
Right. And
under
under
control?
control. Right. Like you
Nick,
said,
you
your Ben and
want
Jerry's
to take
ice
that
cream.
one? You take
No,
that one.
good.
I'll follow you up.
I was just gonna say, like your Ben and Jerry's ice cream. How confident were you paying? What was it? $8? You said
$8.34, and I did not partake in Ben and Jerry's last
right.
night.
So
I
where's your
literally was at the cooler, and I said, well, I have a sweet tooth right now. Right?
Right.
It's not too often that old Sarge gets a sweet tooth, but I had one last night, and I turned around and walked away.
I would love to know what the indicators are he was referring to. Right. What are they? What are the majority indicators saying that people still have confidence? I don't know.
So you're right. I think the point of that is it's completely subjective to whatever they say they are. They're not going to tell you what they are. But I think the point that I really got out of that was if consumer confidence is not in the Fed doing what they're currently doing, then the Fed will have to take drastic measures, even more so, to make sure they restore the consumer confidence. I mean, if that doesn't sound like frankly, a threat to the consumer, I don't know what does. I mean, it's crazy to me.
Means they're going to have to react harder.
Yes.
Which every one of their actions is going to put it back on us anyway, it seems like.
It's going to be a record year, gentlemen. I keep saying it. We're not there yet.
So, Tim, how can people get in touch with you at Patriot Wealth Nation? I know you and your team really help folks in a lot of these scenarios.
Yeah, absolutely. You can reach us directly at patriotwealthnation@protonmail.com. That is the best way to contact us directly, and we can take it from there. But no, we're always happy to help people. We got some, the stock market took a massive hit in the last, since the beginning of the year, but definitely in the last 10 to 14 days, people have felt it, and we've got options to help people protect their money from further losses. And then, get to compound earnings after that. So, people need help right now, and at least something else. And we can at least educate on that.
Outstanding. Thank you, Mr. Tim. I don't know how confident people are out there, Nick. They're starting to lose it on a day-to-day basis with a lot of the things. People are just straight up upset.
We, us. I mean, we shake our head all the time, right?
Yeah.
Yeah.
So the Fed, right, is when you talk about confidence, Fed's trying to come in. They go ahead and increase the actual mortgage prices. Now, all of a sudden, we do see a little bit of maybe a, reduction in some of these listing, but still prices are going up. So it's like, okay, right, when are we going to go ahead and see some type of stabilization? Yeah. And then obviously we're seeing a lot of investors, big Wall Street money coming in, purchasing whole communities because they're wanting to take advantage to the weakness of everybody else, right? Renting homes.
The speed that all this is happening. How about all the people that 6 to 12 months ago contracted on a new construction build and are just in the process of locking in their financing, right? They were approved when they talked to their mortgage broker 6 months ago for this new build, and now they have to give up their plans. Now they can't. Now there's no contract. It's null and void. The next person in line, or again, the flipper, the institution, whoever. I feel really bad for those people who were already in the process, already started moving, already excited about the new home, and within 6 months, their life totally changed.
Completely changed.
Yeah.
Well, think about the follow-up to that. We've already talked at the beginning of April. A lot of tax adjustments has happened in the United States of America, which has been forcing people's. If you're locked into a mortgage right now it's forcing up your actual monthly payment, or it's actually throwing off the debt to income ratios on people who are pre-qualified for a home as well. All of this stuff. So confidence, ladies and gentlemen. So says Ben Bernanke. If you lose confidence in them, they are going to make an adjustment. And Mr. Tim says the floggings will keep coming. So we'll see. It reminds me of that movie Shrek. The movie Shrek, when you're talking about floggings. Okay, well, stick around, ladies and gentlemen. Nick, we don't have a clip here, but Freedom Move USA, Freedom Move USA. What is it? How can a home buyer or seller take advantage of it? Why should people, if they're possibly thinking about selling their home, find a real estate agent at Freedom Move USA? And what's the benefits there?
So this whole show, we've been talking about how people are nervous right now, right? Us included, me included. Like, we don't know what's going to happen. In your real estate business, you need to be able to stand out in a way that people will call you with you have a unique selling proposition, right? So in this new market, if you're a young real estate agent, you didn't make it through 07, 08, 09 in the shift, and all you've known is overpriced listings with multiple bid overpriced offers, it's going to change very quickly. The winter is coming. And in your back pocket, you are going to need something like Freedom Move USA, where we actually help agents connect with a freight rate. Okay. There's two different types of rates in the industry. So all the Allieds and Penske's and U-Hauls and everybody in the market is using a retail rate. So when your customer tries to move from Virginia to Florida and they get a quote for $18,000, $19,000, $20,000, they can come to you and you can give them a significant savings based on the freight rate of our Freedom Move USA network. So I want you guys to head over to Freedom Move USA. We have a national advertising campaign just getting ready to hit the market. You can secure your zip code right now. We have 40,000 zip codes available, moving very quickly. But this is the ultimate unique selling proposition for your market. Whether you advertise it or not, you can call every family member that you know and say, I have something that will truly save you money next time you move. And we all know part of moving, one of the biggest expenses is actually the move, right? The cost of the labor, the cost of the truck, people packing, all that stuff. So we're positioned to help all of our agents thrive through this changing market with a very valuable, unique selling proposition.
Not only that, as we start talking about putting money back into the consumer's pocket, because we have a major inflation's happening, major gas prices, everything else like that, $10,000 to $25,000 of additional money goes a long way for your consumer. So absolutely, without a doubt, it's a huge benefit for homeowners. Absolutely should do it. Now with the raising gas prices, we've seen a 37% increase across the United States of America in fuel prices, and obviously the retail moving industry is very, very, very inflated. So
and I can tell you that we're going to have everything's changing as far as the economy, the interest rates and everything and all. And you might say that real estate's going to slow down, but I promise you what's not going to slow down is people moving from state to state. That overall ecosystem where people are living where they're living now, understanding that they can work from home and live someplace cheaper, is going to spur a lot more movement. So if you're an agent and you don't have a referral network and you're not really prospecting to other agents across the country, you're missing out on a whole bunch of money, a whole bunch of deals, because there's traffic coming to your state. And if you have a unique selling proposition like this, where someone's legitimately, like every single day we see it, quotes going out for $18,000, $20,000, $25,000 to move across state, and we're coming in at half that, even less than half that. Real, this isn't, a timeshare program. This isn't some BS. This is tapping into existing freight networks that are already being done, owner operators with insurance. This is legit. You guys need to check it out.
If you're a home buyer, potential home seller out there right now, all you have to do is go to Freedom Move USA, enter your address information. One of the call center representatives will reach out to you, and then they're going to get you hooked up with a certified real estate agent in your area that can go ahead and help you save all of this money on your next upcoming move. So think twice about choosing a realtor that's not certified with Freedom Move USA, unless you absolutely want to spend that kind of money. So it's not necessary anymore. Tim, how far does an additional $10,000 to $25,000 go if you put it back into the pocket for most families?
Oh man, that depends on where you're at financially, but I know everyone, I don't care what your financial position is, could use that or keep that additional $10,000 to $25,000. So what you choose to do with it, and whether you would invest it and make it grow, or use it to survive the continued inflation and the cost of things going up, so you can buy your $20 a pint Ben and Jerry's ice cream. That's it's up to the individual. By golly, why wouldn't you save it?
Yep, absolutely. Tony, there's a lot of people that are moving out of the state of California for many reasons. We see that being a large state of depopulation, moving to different states. But it is pricey. We even see with U-Haul and Ryder and some of these other do-it-yourself rental places, they're asking folks to go ahead and bring back the truck. There's so many people that are leaving that part of their process is, well, you got to get it back to us. Otherwise, you're going to pay a ridiculous rate. So how far can $10,000 to $25,000 go for your clients there, Tony?
You mean in Irvine? They could probably buy a dinner once or twice a week. That covers my Melrose tax for the year.
Yeah.
Well, that being said, money's money, no matter how rich or middle income you are, in between. If $10,000 or $25,000, if someone were to dare say that's not much, then I say give it to me. Oh, now suddenly it's valuable. So that being said, you're right. Things like the U-Hauls and these, let me tell you, I think most of us done it ourselves. It's a lot of sweat. It's a lot of time. It is not fun. It's not something you look forward to. And it's almost always the last thing we think of. So I do agree that if you can save somebody a lot of money, make it very convenient and easy, and you take away that ugly idea of, oh, I got to do all this to go from California to Texas or Florida. Certain realtors that have access to the Free to Move USA program, if they can truly save you a lot of money and make it easier, I can definitely see how that could be a unique selling proposition, because that is a big pain point. And it's unfortunate a lot of people don't think that far. I myself have always made sure when talking to a seller and buyers is you got to spend a little time to think about how you're going to move and what your logistics are going to be and your expenses. It isn't hard. It's just people tend to kick that can down the street. So a Free to Move USA program, having an agent that's already connected to a system that's costs less, it's easier to work with, and you have an agent that's already associated with the system. I mean, I don't know how much easier a move can get other than having somebody teleport everything from A to B. So This is probably going to be one of the nicest, easiest, lowest cost ways, but they would have to connect with the agent and find out how that goes. And folks, I'll tell you this, Jake explained it to me. It's a good system, and it isn't hard at all. Matter of fact, it's actually quite nice. Seriously.
Outstanding. Thank you, Mr. Tony. Oil prices, Nick. Some Goldman Sachs analysts are talking about how they feel the prices of oil are going to hit $150 a barrel. And guess what? As it pertains to even moving on these retail options, that's just going to go ahead and make it even more costly if you're deciding to go with one of the major van lines or rental options out there.
It's going to be like locking in your mortgage when you called the van line 2 months ago saying you're getting ready to move, you're packing everything up, and then right when you get to turn the key and go, they say, hey, by the way, it's going to be 25% more to move because fuel costs have gone through the roof.
That's one of the biggest issues with people right now is you'll end up getting a quote from a moving company, but then all of a sudden they're holding all of your home goods hostage until you go ahead and pay alternative fees before they drop it off to your home. There's a lot of miserable stories in the moving side of the house, but not with Free to Move USA. It gets locked up. It goes from point A to point B. It is one cost. It is what it is. So let's go ahead and find out what some of these analysts are talking about for oil prices per barrel here this summer. So here it is.
150. You think it's real?
Yeah, I mean, it's definitely a high probability event. It's not our base case. Our base case remains 125 this summer. But the upside of risk around it, puts a high probability around 150. So why are the risks so high?
Oh, but Jeff, come back. When you say high probability, just before we even get into why, when you're doing the math, how do you handicap that?
We just say it has a really long tail, 175, 200. We don't know how high it can go, and there's several reasons for that. Our models say demand destruction kicks in around 125. However, when we look at the way those models are constructed in the history, the environment today is much different. Why? Because you have subsidies going to lower income groups, particularly in Europe, which is be the center of demand destruction. But you also have subsidies, going to many of the emerging markets. India, Indonesia have stepped up to the plate. The other factor, savings are still quite high. and credit capacity is high. That means it's a very different environment in terms of affordability for the consumers around the world. So while the historical elasticities of demand in the models would suggest 125, the upside risk around that, I think, are substantial.
And when you talk about that as a possibility this summer, is that something that lasts for months? Is that something that lasts for weeks? Sort of walk us through what the rest of this year would look like under that scenario.
Well, commodity prices don't trend up like financial markets do. When you have severe shortages and demand is up here and supply is down here, the price spikes to bring demand back in line with supply. You cannot, when you're out of inventory, you cannot run a deficit indefinitely. And that's what the price spikes are. So you would look at, this February, we spiked, up towards $140 a barrel. Why? Because we had significant near-term shortages and dislocations. Jet fuel in the Northeast spiked to $300 a barrel earlier this year because of local dislocations. And think about European natural gas. It's this. The trend is each spike is higher than the previous, and each low is higher than the previous low. And it just keeps doing this when we go into these super cycles. So, it's not a long-lasting spike above 150 or something like that. It's going to pop up there, rebalance supply and demand. You come back to the lower level, and then once demand tries to grow again, you pop again.
Okay, so it spikes out on price. Everybody says, oh, I'm going to stay at home. Demand goes down. Then all of a sudden people say, okay, I'm going to go to the beach. They go fill up their vehicle maybe one additional time a month. All of a sudden it throws it all off and it goes back up and comes back down. So, ladies and gentlemen, we live in the most oil-rich country in the world. All right. We saw from the previous administration to the current administration where oil prices were at. And we all know that oil drives our economy right now. Yes, we are trying to go ahead and move towards a more efficient, low footprint, less carbon-based world, right? But we have to do it in a smart way. To radically go ahead and make change and to shut one side down without balancing the other side causes us all to go ahead and be the burden of this scenario. So, gentlemen, $150 a barrel of oil speculation for this summer. We all, as consumers of that product, directly and indirectly, are going to make decisions, and it's a big trickle-down effect. Mark, we talk about supply and demand of homes and valuations of homes, right? So we talk about how oil is involved in everything in our life, to include homes, to include building material, to include getting those goods to and from. We're seeing all of this. Wouldn't we make a big decision, almost an emergency type situation, and talk to all of the wonderful men and women that work in the oil and gas industry and say, hey guys, we have a crisis right now. Let's get to work. Because obviously this is a problem. What say you, Mr. Martin?
Well, the demand has not waned and the supply is limited. It's not a renewable source. So the global supply of oil is limited to what it is. And when we're in the middle of wartime and we place embargoes, things change. We do have a wealth of oil here in our own country, but we also have a movement towards other sources of energy. And you're correct, we can't just turn on a dime and say we're going to all renewables. That's just not a reasonable proposition. But when people feel the pain, they start to conserve. There's less trips to the beach. When I don't know what you saw at 7-Eleven last night, but I drive past gas stations here that are $6. I've seen on the news $7. These are the kind of things will set you in a conservation mindset. Will oil get to $150 per barrel? I don't doubt it. The last time it got near this was 2008. And what was going on in the mindset of the American in 2008? Like Nick mentioned earlier, fear and uncertainty.
Sure.
Really
So
weird place at that point.
I was watching a report, some small business owners, restaurateurs, there's a lot of amazing small businesses in this country, which are the backbone of our economy. and they depend on consumers to go ahead and be able to walk through these doors, maybe purchase that extra gelato, maybe go to a little restaurant and have a Euro sandwich with their significant other or their kids.
Now you're talking.
Yeah. So, but now we're sitting here having inward conversations with ourselves saying, no, you know what, let's pull back. Less eating out at restaurants, less exploring our country, more conservative minded. And people are stocking up some different things inside their homes. They're having dinner at home more often, and they're having conversations around their personal dinner table every single time they sit down. Every time they sit down, it's not necessarily how wonderful the meal is. It's about how much the darn meal has cost at every single dinner table. I think we're in an emergency type situation, Mr. Tim Parnell, in our country. And I would unlock the whole country if it was me to go ahead and rebound from this. What say you?
I think when the cost of transporting yourself to work becomes greater than the actual income you produce from it, then you will actually see a drop in the workers showing up, because that just makes sense. I mean, that's just economics, right? And so, and I don't disagree with Mark in that, you know, pain and fear are excellent drivers for behavior, but my issue is whenever fabricated pain and fear, or what we're told to be, you know, in fear of, and what we're shown and forced to be in pain of because unnecessary prices at the pumps. I don't care which way you contend that. If you shut down the pipelines and you shut down drilling, the only effect left is to run out of surplus supply. So then what we tap in our own surplus, and then we sell that overseas. And there's no sense being made out of any of this, except for me, it's just, what is the ultimate goal here of those in power that have the ability to, frankly, lower the price of oil and therefore the cost of everything associated with it.
Very much. Nick, what say you?
I know that at my local Sam's Club, it takes about 15 to 20 minutes to stand in line or wait in line to get some gas. It's 10 cents cheaper, right? There's a line around the block to save that 10, 15 cents or whatever it is that day. So there's a ton of pain there, right? And
well, I think it's a big indicator on confidence for anybody that's watching. So we as American citizens have the ability to go ahead and get in touch with our elected officials to let those folks know in our local area what our thoughts and concerns are. So if you're concerned and if you have a little bit of a failing confidence in what's going on, you have the right to go ahead and get involved with your local community and your local leaders to weigh in your opinion. It doesn't take just one of us, it takes all of us. But we are all seeing the cause and effect of these types of situations. So very good. Hey, Nick, you know what? Goldman Sachs went ahead and decided to purchase a whole community in Florida for $47 million. Let's go ahead and see what this is all about. What say you?
Yep, let's check it out.
The housing shortage and skyrocketing real estate market in Central Florida is drawing attention and money from Wall Street.
Watch 2's Scott Heidler reports an investment fund just bought up an entire neighborhood.
Cypress Bay rests at the very southern edge of Brevard County. But this rental housing development, thanks to a surging market in Central Florida fueled by scant available housing and a growing job market, caught the attention of the deep pockets of Wall Street. That's a concern for a movement of Brevard faith-based organizations working for more affordable housing here.
When investors come in, of course, and invest, property just goes off the roof, right? And which marginalizes a whole lot of people who just can't afford it, especially those in Brevard County who are making less than $46,000 a year.
This community here in Palm Bay of 87 homes was bought by two investment funds for $45 million, backed by massive New York investment bank Goldman Sachs, a relatively new move by Wall Street capitalizing on spiking rental prices.
The degree of large Wall Street money coming in is fairly new, and I think this is due to the unique circumstance of housing shortage.
That shortage is not looking to correct itself soon, so the money will probably keep flowing.
Wall Street is able to generate money private equity, hedge funds, and others to say, let's go chase the rising rents and hence money coming into rental property development.
So what happened at Cypress Bay with the steep market demand here will no doubt happen in other nearby neighborhoods. In Palm Bay, Scott Heidler, West 2 News.
All right, so 45 million. If those homes are in the threes ish, that puts it about 120 to 130 homes inside of that community that they just completely purchased. The gentleman on the news there in the mainstream said a rental housing development. Now, I don't know how accurate that is. Those homes are obviously built to be purchased and sold or rented from the owner specifically. We've seen a lot of homeowners associations coming in, the city of Dallas, Texas, the city of Cincinnati's Port Authority trying to go ahead and hedge this from going on. Obviously, Goldman Sachs wants to go ahead and get in the game at a large level and start trading these houses like stocks and taking advantage of high rental prices because it creates a return on investment for their money portfolio. So what is going on in Florida, Mr. Nick? Break this down a little bit for us.
I mean, you look at the turbulence in all markets, and of course, it makes sense to transfer your funds and buy some assets. I think, Goldman Sachs, like we say, $45 million, like that's a big number, and it is a big number. But compared to the other institutions that are out there that have billions and soon to be trillions of dollars of real estate, like it's the new game. So they understand it. They know that the future of this, the wealth gap, the amount of the average consumer, what they make versus what they can spend to buy an asset is getting less and less and less. So why not create a portfolio of homes for people to just rent in perpetuity, right?
That's unfortunate. Mr. Mark Beeler, what's your thoughts on the big investment worlds coming in and purchasing homes like this?
Well, this is just a repeat of what we saw after the mortgage meltdown. We saw a lot of big institutions come in and scoop up as much real estate as they possibly could, and they've been holding on to it and renting it at what was reasonable rates up to this point. Once they saw that appreciation, I see a lot of them selling off, but I think that this type of move should have some type of regulation around it. I mean, honestly, when they mentioned that there's scant available housing was what they said in that, with employment on the rise, I mean, they're not doing anything to help that that availability of housing being scant in their terms. People are going to want to buy homes, so they just took 87 more homes off the market, and sure, they'll do good with that, but I just don't know that that's where they should focus their energies at this time.
Understood. Mr. Mark, you run a large education appraisal institution in the state of California, and you're always educating real estate professionals, other appraisers on how to be diligent, more aware of what they're looking at. How can people get in touch with you if they want your services, sir?
You can reach out to me by email. It's Mark, M-A-R-K, at cmpappraisal.com. If you want to learn about solar, appraisesolar.com, how to value solar. I'm doing a class tomorrow for appraisers across the country.
Outstanding. Thank you very much, Mr. Mark. We appreciate you. Tim, whole communities, I know close to you down there in Texas, this is happening down there too. Regulation, do you think it needs to be imposed here?
Well, just because something is legal doesn't make it ethical. Okay. And I completely agree with what Nick's saying. And he's basically saying that the Wall Street money knows that there's a problem with the stock market, and they've seen it coming. They have a heads up greater than we do. And so they're looking to, we'll call it diversify or reallocate, and putting it into hard assets is really, 101 what you do. And where else can you spend that much money in that amount of time, so short time period? And that is buying up entire swaths of neighborhoods. And so that's not just in Florida, it's all across America, wherever they can get these builders to sell them the entire thing. And they're making it worth the builder's while, right? I mean, otherwise the builder's got to set on it and run the risk of maybe the bottom falls out of the market while they're, still have homes left to build or in the middle of one. And so, yeah, I mean, the builders just want to make their money and move on. So, but yeah, who's getting hurt in the end? It's the home buyer, the person that desires to have the home. So no, I also agree with Mark that there should be some sort of regulation as to, the amount of property that could be bought at any given time, and just things like that. It's certainly one of those unforeseen circumstances, the unintended consequences of when, other countries and other, conglomerates can buy entire neighborhoods and what that can do to a market.
Outstanding. Yeah. Ladies and gentlemen, if you want to go ahead and take advantage of Patriot Wealth Nation, please look up Mr. Tim Parnell, and you can take some of these moves for yourself individually and be your own bank. I highly urge you to go ahead and get in touch with Tim. So, Tim, once again, how can people get in touch with you?
You can email me at patriotwealthnation@protonmail.com.
Outstanding. Thank you, Mr. Tim. We appreciate you. Tony, they're buying in Florida. Are they doing this in California?
Southern California, good luck. Things are so expensive around here. I don't see that as a current or near future problem, because in places like Orange County and in some parts of Los Angeles County, it would be an extremely high price tag to buy a cluster of homes in an area. It could happen, but I would say currently that's probably not going to be a problem right now. Now, that said, number one, it could be wrong. Number two, like Mark said and Tim agreed with, and I agree too, in terms of having some kind of regulation, I mentioned this about 3 shows ago, where these brand new home builders, in many cases, will limit you. Let's say you got $1.5 million homes each, and someone says, I want 5, and they are prepared to say, no, you can only buy 2, because there were some people snapping up a whole bunch, and when the development's halfway done, they start selling theirs, and they're competing against the developer, and they don't want that. So there are builders on new home construction that will limit how many you can purchase. Now, if we were to have some kind of federal regulation to help regulate this to keep it fair for the consumer, but yet still let the investors have a chance, I can see we're having a limitation of maybe 3 homes within a community, maybe 5 homes in a community. There should be a cap on it. The only problem with that is then they may do what Disney did back in the 70s. Form 7 different companies, secretly form 7, each one buys 3 sets of homes, and then surprise, it was really owned by one big corporation, so we'd have to make sure to not have. So being able to regulate, I think, would really be helpful in terms of keeping it fair. I mean, it's still an economy where whoever's got the money can buy just about whatever they want, but in terms of housing where people need to live, you got a bunch of us regular people going up against, billion-dollar corporations. I can see where the government should do a little something to balance those scales so the fight could be reasonably fair, because right now we still have that shortage. If things change in the future, we can revisit that. But right now, Southern California, I think it would be not that big of a problem right now, but things could change depending how the economy is in a few years.
So, Nick, I'm a big fan in the free market, right? Capital free market, but all of these, and I'm okay with this type of scenario, right? If they can do it, and if it's legal, and if it's so be it. If they want to purchase some homes, however, the foundation of our legislation in our government has to be a stable start to go ahead and empower the free market to make sound decisions. Mm-hmm. And I see that there's been a lot of push in from existing communities, and now here's the effect of the scenario. What say you on this situation in Florida? Where do we go from here?
I'm with you on that, right? The idea to regulate big business like that, I'm not. That's not for that, right? So that being said, I do think there is some builders have done this. They do this in the MLS, like the first to move option, right? So if there was anything to be put into place, and not that the average person would have $45 million to purchase a neighborhood, but there should definitely be a first right of refusal from the consumer. There shouldn't be a position where a builder would be able to build an entire subdivision without even launching it to the public to then sell to a giant corporation. Like if that would be a slight nod to me, that would be almost like insider trading, right? That wouldn't be a free market. So if that could happen, then that might balance some of the equation out, like give people the opportunity to buy the individual homes. I don't see that changing anytime soon. I think in the hot markets, like here in Florida, investors have their pocketbooks open and they're drooling at all these opportunities for rental increase versus the price of the homes that they're buying. So it's a really scary scenario. And I think if you're a real estate agent in this market, really educating your people on what's going on and why it's so important to get a hold of assets right now, especially if it's your personal asset, the place you're going to be for a long, long time, and have those conversations.
Outstanding. Tony, how can people get in touch with you if they need representation in California?
Well, very easy. All my contact information is right there on my website. They just go to Tony Barbarino, TonyBarbarino.com, and they can reach me through social media, phone, text, emails. Everything they need is right there.
Tony's one of the best, ladies and gentlemen. If you need representation down there in Southern California, reach out to him. And he's a pretty amazing individual. If he can't help you, he's going to find somebody who can. But the chances of that are slim to none. Nick, we went a little long today because there is just a mouthful of stuff to go ahead and talk about. So hopefully all the folks that are listening to us here at Real Estate America News found some wealth of information and knowledge sharing from it. If they do, should they comment and shoot us a like, maybe ring a bell, or how do you even say that on YouTube? If you're watching on YouTube, should they
should like and subscribe,
yeah. Ring that bell.
Here's a little marketing tip from a marketing perspective. Most of the time, I'd say the majority of YouTube channels, on average, like as far as a real estate agent is concerned, not a influencer or anything, over 90% of the people that watch the channel are not subscribers. So if you were to take in your own personal marketing into account, you need to ask for the subscribe more often, and that's what we're going to do here. So please subscribe, please share. If you're watching this on Facebook, if you're watching a clip, because we will be producing clips here pretty soon, we ask you to share it. We're putting a lot of work to give you guys the most valuable information for this industry.
Outstanding. So once again, ladies and gentlemen, we're streaming live on the RU Nation Network. If you haven't gone over and checked out reunation.com, please do so. There's a lot of amazing show guests and contributors. You can find us at Real Estate America's newsroom. All of our previous shows and latest episodes are sitting right there for your viewing. Also, if you guys would like to go ahead and be on our show, or if you have any hot insider news, please enter your information on that page at runation.com, the Real Estate America's newsroom. We go ahead and kick out show notes and some of the deep dive research material to everybody that has actually entered their information. So you get show alerts, some text updates and notifications and things like that. So, all right. Well, Mr. Nick, thank you so very much for co-hosting here today. Any final thoughts before we leave?
Stay tuned. We got more great shows coming.
All right. We are hitting it live every Tuesdays and Thursdays at noon Eastern, ladies and gentlemen, 0900 Pacific. So as always, bring your pencil and paper and your favorite beverage to the show. And we look forward to seeing you next time. Have a blessed and unstoppable rest of your week. Enjoy May while it's still here. Ladies and gentlemen, chin up and chest out. God bless you all.